What's up, everybody? Hope you're all well. I put together this little presentation for you. There's a big need in the market right now for accessing equity in multifamily investment properties, commercial properties, mixed-use properties, 2 to 100 unit multifamily, right? A lot of people locked in very low interest rates, some as low as 2.25%, some even at 4.5%, and they have a lot of equity sitting in the property. So maybe you have a $2 million investment property and only owe $1 million or $800,000. So you have a lot of money tied up that you could probably use to make other investments, pay off debt, buy out partners, and no banks are considering these right now. So we put together a private group in order to fund these requests strategically. Not every deal is going to get funded, unfortunately, due to the economics. But I wanted to put together our cheat sheet for you to show you specifically how to get a second lien on your investment property. So if you follow this chart here, you'll be able to see we need the subject property address, the legal property info and description, whether it's a legal 2-family, a legal 5-family, a 200 unit multifamily, it doesn't matter. Just need you to put that information in. Use of proceeds, what do you need the money for? Make an investment, pay off debt, partnership buyout, buy other real estate. All those things are obviously realistic scenarios. How long do you need the money for? What we like to do is look at when your first mortgage lien is coming due. So oftentimes commercial mortgages and investment properties have adjustable rate mortgages that will reset 3, 5, 7, or 10 years out. So we want to make sure we're putting you into a loan that we know we can get you out of, and also understand the expectation of duration of us having the money lent out for, right? So we go up to 36 months. So that's 3 years. We are able to roll all of the interest into the loan as well, which is nice. So then that way it doesn't negatively impact your cash flow, which we'll go over. But let's say you need a loan for $200,000. Maybe we'll give you a loan for $300,000, but roll in the 36 months of interest. That way your payment is the same. Your rents are going to be still being collected, hopefully being increased. So by time you're ready to pay off both the first mortgage and our second lien, none of your cash flow is impacted. If anything, your numbers hopefully will get even better. The rates do range from 12 to 16%. And while I do understand that may seem high to a lot of you that are watching this video, it's private capital, it's second lien position. If you decide to not pay us and pay the first mortgage and litigate, file bankruptcy, go into foreclosure, there is a lot of risk there. So we want you to be prepared for what the economics are on this deal. Also, very few other people are doing these deals. We will look at a loan starting at $200,000 all the way up to $10 million. If you want to go over $10 million, we have other private capital sources that specialize in second lien and mezz debt over $10 million. But for these particular deals, 200,000 to 10 million, we are in that 12 to 16% range, 2 to 4 total points. Credit score is not a factor. So that's really big here. So if you had some blemishes, if you had some issues, if your tenants weren't paying you, whatever the case may be, if construction took longer than needed, we're happy to come in. We're even happy to come in and bring your loan current. So if you're not paying your first mortgage, but you have significant equity in the property, we're happy to come in, lend you the money, bring you current on your current mortgage, and then give you that second lien behind it if there's sufficient equity in the property. So let's look at what we look for. So here you're going to put in your current value of the property. So let's just say, for argument's sake, it's $1 million, right? Let's say your first current mortgage amount is $500,000. And let's say your first current lien lender is Bank of America, for argument's sake, even though they're probably not. You're going to put in here your total mortgage payment. Let's just say it's $3,600 a month, whether that includes taxes or insurance or not, how much your annual property taxes are, how much your annual insurance property premium is, and then also how much you're looking for as far as us giving you money. So we will go up to 70% combined loan to value. So for these purposes, let's just say $200,000. So over here, you're going to see what your current loan to value is, and then what your future combined loan to value is. So if this number is above 0.7, we're probably not going to consider it. If it's tight, we're definitely going to order an appraisal either way to confirm. Down here is critical as well. Make sure you're putting in your current rents received. So let's say you're receiving $9,000 a month, or obviously $108,000 a year. You could put that in. So current rents received monthly. We put monthly because obviously that changes. You may have a vacancy. If you do think that your rents are going to be significantly increased over the next 6 months, please let us know that. Also, if you have any vacancies, please let us know that as well. And also your other expenses, water, sewer, utilities, snow removal, so on and so forth. So we'll make a very quick decision on this. We like to say that depending on when you submit this, along with what we need are your 12-month bank statements for the entity, as well as what's called a T12, which is basically 12-month trailing year-to-date profit and loss. So if you're able to get us those items, we can get back to you relatively quickly within 24 to 48 hours with our soft quote, and we can close these deals as quickly as a week. Usually they take about 2 weeks all in, depending on the time of year and the ask. Usually the appraisal or the value is up for interpretation. So if you guys have any questions, please reach out, let us know. We do see a lot of loans that were done from 2017 to 2020 at very low interest rates have appreciated significantly in value. Rents have been increased. So you have a lot of people that have $3, $4, $5, $6 million in loans at sub 4% mortgage rates for the next couple of years. So rather than getting rid of that 4% or lower mortgage rate, we believe this is a viable option to access your equity and keep your attractive first mortgage rate, and also the ability to close quickly. If you have any questions, reach out. If you're interested in receiving this chart, please email me at jeff@jeffvannote.com. I'm going to put that right here as well, jeff@jeffvannote.com. And again, we are fully direct on this. If you're a broker, we do protect brokers. If you want to refer us deals in, please do that as well. We will make sure you're adequately compensated and you will be fully protected. So I hope you have a great day. I hope you learned a lot from this, and I hope you're able to use this product to make your business get you to the next level.